All right, everyone. Well, welcome back to the UBS Introduction to Finance and Investment Banking session. Today, we are going to be talking about why investment banking. So, just to give another quick overview of the program as a whole, it's divided into three sessions. And last session, we talked about the world of finance and banking and the resources that are available at UCLA. This session, we're going to be talking about what investment bankers do, what firms are out there, and think really critically about the key reasons why you may want to or may not want to pursue a career in investment banking. And then in the third session, we're going to be diving into the specifics of how to break into investment banking in the first place. So, just to recap last week's session in more detail, we talked about what financial institutions are, what role they play in the world, and how recruiting has a ton of elements involved, right? We went over the main clubs at UCLA, which are BAM, BVI, BHF, and BIT. And we spent a lot of time discussing how to break into those clubs, but also made sure to emphasize that clubs are a nice to have, but not a need to have. So it's always great to be in a club. And it can really help you learn more about finance and recruit well, but you don't necessarily need to be in a club to perform well. And I think a bigger reason why I want to caveat that is it's very difficult to break into a club. And there are so many qualified and smart students that, work really hard but don't end up breaking into the club, but they still get great offers. So I think that's a very important detail to cover there. So diving into the first part of the session itself, I think when it comes to understanding this question of why one might want to do investment banking, I think we also have to understand what investment bankers do in the first place. So we touched on this kind of briefly in the first session, in terms of dividing into product groups or end coverage groups. But at the most basic level, investment bankers are professionals who help companies achieve certain financial objectives through financial transactions. So we think of investment banking work in terms of like deals, in terms of projects or transactions that they work on. So in the simplest language, right, if a firm wants to sell itself or maybe they want to buy another company, they'll turn to investment bankers to do that. If they want to raise money by taking out loans or issuing bonds, they would go to an investment bank, and that's what we call debt capital markets. Or maybe they want to sell shares of the company on the public markets, and if they decide to go public, right, that's called an initial public offering or an IPO, and that's something that you would work on if you were in an ECM group or equity capital markets group. So in that sense, investment banking is on the sell side, right? So sell side meaning we facilitate the sale of investments, or we facilitate the process of making investments. Whereas on the buy side, if you're in like private equity or venture capital, you're going to be the one executing those investments and committing capital to things, right? So the reason why it's called investment banking is because investment bankers provide advice, and they provide access to capital, and they facilitate investments for firms. So I think a lot of people get the sense that investment bankers are the ones buying or selling like stocks, right? Like maybe like a stockbroker or a trader, but that's more the realm of like hedge funds or sales and trading, where they're actually going to be like buying securities and selling them, what you'd imagine someone working on Wall Street would be doing. But with investment banking, especially something like M&A or restructuring, that's more like long, drawn out, project-based work. You're not necessarily like tuned in to every single little thing that's going on in the markets all the time. Whereas you would be in another role that's not necessarily investment banking. So I think it's important to clear that up. In terms of the concrete like tasks that you would do in banking, a big part of it is modeling in Excel. So what does that mean? It's like making a financial model using that program. So maybe you would be forecasting a company's performance. Maybe you would be building a model to try and determine how much the company's worth using something called like a discounted cash flow analysis. And that's something that you will learn more about if you decide to get into banking and try to learn those technicals. There is a lot of PowerPoint work, so a lot of building presentations. You'll do a lot of meetings, usually over Zoom, at least in recent years with like clients or counterparties. And you would be responsible for conducting research, providing background, and just managing the process of executing these transactions, especially at the junior level. And to that point about like the junior level, I think before we talk more about like what investment bankers do or what a day in the life of an investment banker looks like, I think it's important to understand the hierarchy that exists in investment banking. So right now, we are undergrads, so we're still going through college, and most of the times that when we graduate from college, we start out as analysts. So analysts are the most junior level of investment banking. So most people, come in with like basically 0 years of experience. These are the people that are building the financial models, they're building the slide decks, and they do everything that is needed to get a deal done, right? So they're the backbone of the team. They do the ground level work. Associates are people that have been promoted from analysts, and they usually have maybe like 2 to 3 years of experience, maybe sometimes 4 to 5 years. And they have more responsibility, but they're also similar to an analyst in that they're doing a lot of the groundwork. But a big part of their job is like checking the work that the analyst does before sending it up another level. And so at the undergraduate level, so when you do your 4 years in college, you'll usually become an analyst. A lot of people that join as associates directly come from MBA programs, so that's a big source of where a lot of associates are getting their educations. And then beyond that level, that's when you get to the more senior part of this pyramid, right? And so this pyramid is also directly related to how many people there are in this context, right? So there are the more analysts and associates and VPs and directors and MDs, right? So that's kind of the idea behind that visualization there. So vice president, maybe they have like 5 to 6 years of experience. And so a big part of their job is really checking the work, leaving comments on the work that their analysts and associates do and just making sure that everything looks right before they send it up to even higher levels of management. And they're really sort of that intermediary between the most senior people and the most junior people. So they play a pretty big role in the overall investment banking experience. And then after vice president, you may have like a director or an executive director. So those people usually have a little bit more experience. They're closer to being an MD. An MD is a managing director, which is the highest level. Um, and they sort of play a similar like intermediary role. Sometimes they can fill the shoes of an MD in certain situations, but they're kind of just like a pre-MD. They're about to be promoted, or they want to get promoted, but they're not exactly there yet. And then you get to the top of the pyramid, which is the MD. The MD, the managing director, these are people that are usually in their 40s and 50s, and they make quite a lot of money. It's very difficult to get to this part of the pyramid because most people sort of drop out after being analysts because it's hard to sustain a lifestyle in investment banking for so long. Um, and so they're kind of responsible for winning deals in the first place. So they maintain relationships with clients. They, sort of look over the deal work as a whole, and they're very much responsible for driving that process forward and maintaining the relationship with the company that you're working on or the deal that you're working on, right? And so it's important to understand this pyramid here because investment banking is quite hierarchical. If you're an analyst, you send yourself to the associate sends it up to the VP, maybe the VP sends it back down, but there's a very clearly defined hierarchy that is important to contextualize if you want to succeed in investment banking and understanding what that life looks like. And so I think one thing that's really important, or at least it can be helpful to talk about, is like, what does this actually look like concretely? Like, so I did my summer in investment banking, did an internship after my junior year. So just a couple months ago, because I'm a senior now. And so we talk about, oh, we help with M&A or we help with DCM or we work on these kinds of deals. But what does that actually mean like day to day? So I thought it would be helpful to walk through like in an illustrative way, like what does it look like to have a day as an investment banking analyst? So let's say you usually wake up maybe you're 8 or 8:30, and you'll probably see like 50 plus emails in your inbox, depending on how much stuff you have going on, but usually it's quite a lot. You get out of bed, you take a closer look at what's in there, and then you make your commute down to your office in Midtown. From your very small apartment, maybe you're living in the East Village, and you probably get to your desk by around 9. Um, at that point, your VP comes by and tells you that the client wants to model out a new M&A scenario. And then there's another deal team that's asking you to like update a presentation for a board meeting that's coming up. And so the board meeting is coming up and it's more sensitive. So maybe you spend your time working on that and then you pivot to the modeling thing that your VP asked you about. And let's say you finish by like 11:45, just a little bit before noon. So let's say that you send them out to, your associate so that they can review it. And then maybe you'll go down to the cafeteria and pick up some lunch and then you eat it at your desk. And so a lot of people will eat at the desks just in case something comes up because in investment banking, you want to make sure that you're responding very quickly and that you're very communicative. And so, as you're there, maybe you quickly update like a buyer log, which is just like tracking what's going on with like an M&A deal from the buyer side. Maybe you wait for a few updates. And let's say like an hour passed, right? And so in investment banking, there is a lot of there can sometimes be free time. So you're working pretty long hours, but you're not always going to be 100% focused on tasks the entire time. There's a lot of like there can be downtime in a lot of scenarios. So, at this point, your associate is like they made a suggestion to the modeling thing that you sent to them, and so you quickly implement that. And now it's around like 2 p.m. So after you finish up the Excel file, you send it up to your VP. The number of emails might kind of slow down a little bit, and so maybe you go for a quick coffee run, right? And then at 3, let's say that you have like a bunch of Zoom calls. So then, you hop on a call with like a management team for a sell side you're working on, and then you like reflect a tracker after you're done with that meeting. And then by the time it's like 4, between 4 and 6 p.m., maybe you have another Zoom meeting to divide up responsibilities internally on a deal you're working on. Maybe you work on a financial model called a discounted cash flow analysis for 2 hours. And, maybe there's something that's not working quite right with that model, but you're just trying to figure it out. You tinker around, and then you get it sorted out. 6 p.m. hits. And when I was at my firm this summer, 6 p.m. was when our meal credit hits. So we got $35 of Grubhub credit to basically just kind of buy whatever we want to feed ourselves. And so I remember once the hour struck, you just hear this kind of like this wave sweep over the interns where everyone's just talking about, oh, what are they going to order for dinner? And then so, maybe you spend a little bit of time looking around to see what you might want to eat. And a lot of the times you're going to be eating at your desk in case something comes up. Not always true. Maybe you'll go down to the cafeteria or maybe you'll sit outside somewhere. But a lot of the times you are going to be eating at the desk. Between 8 and 10 p.m., you don't have too much to do at the moment, but your associate's still there and your VP is still in her office. So maybe you stick around just in case they need something from you. And so that's something called FaceTime. It's not necessarily the same in all banks, but with the concept of FaceTime, it's like you want to make sure that you are seen and that you're present in the office if your seniors are still there. So you don't really leave until your seniors leave. And again, this is something that is, I think, part of the older culture of Wall Street. Doesn't always apply across the board. There's some places with very much like no FaceTime culture. There are some places that have that. So let's say it's like 9:30 p.m. and then your VP will come by and maybe she'll catch up with you and ask you to build a value creation analysis and an analysis at various prices or AVP slide for this transaction that you're working on. So it's you got this at 9:30, so you start working on it for maybe like the next hour or two. I found that by 11 p.m. or midnight, probably over half of the office is gone. A lot of people choose to work from home after leaving, at some time, maybe like 6 or 7. Um, and then like once midnight comes, you're in the office, it's around 12 a.m. Things have really slowed down by that point. And so you start to wrap up and then you get home and you reach your apartment by 1. When I was doing my internship over the summer, even past 1, sometimes going to 2, 3 a.m., people were still sending a lot of emails back and forth, still working on things. But, let's say in this case, it's nothing super urgent. So then you fall asleep by 2 a.m., right? And so that is kind of what an average day, I would say, looks like. So this is, I would argue that this is like medium intensity. Some days you'll be working until maybe just 10 or 9, and then you get to go home and sort of log off for the day. Some days maybe that goes into like 1 or 2. But as you can see here, it is quite the time commitment. There's a lot of time that you spend in the office, a lot of time you spend working. And the reason behind that is because, as I mentioned before, being in investment banking means that you're on the sell side, meaning that means that you're working with clients and they have very high demands. And these transactions you're working on are probably pretty important to them. And so they want to make sure that, nothing is off and that, the highest quality of work is being produced. And so that ends up meaning that junior bankers work very, very long hours, which is something I'm going to expand on in later slides. So, Now that we know what a day in the life of an investment banking analyst looks like, what investment banks are out there? So, the first category that we're going to cover are the bulge bracket banks. So, the bulge bracket banks are the most prominent investment banks, and they're called bulge bracket because of the way that they're like listed on public filings of financial transactions, right? So if you work at a bulge bracket firm, that means that you work at a firm that probably anybody just on the street would recognize, right? So many of them have like very big like retail or commercial banking parts. So very much like consumer facing. And some, examples of bulge brackets are like JP Morgan and Bank of America. And sometimes they're called balance sheet banks because they just have a lot of money in them, because a lot of people have their deposits with these banks and they just have a lot of assets. And so working at a bulge bracket is nice because they have name recognition and they kind of give your resume a little bit more strength when you have a name brand firm like that. And if you want to work in other industries, people know what Goldman Sachs is, people know what JP Morgan is or Morgan Stanley, and that can take you pretty far. And, on that note, on like specific names, I think it'd also be helpful to talk, just very briefly about each of these investment banks. So, Goldman Sachs is probably the definitive leader on Wall Street. They have a very rigorous culture and they work on very, very large transactions and they have a reputation for excellence. JP Morgan is the largest bank in the US by assets and employees. They recently opened up a new headquarters, and because of their sheer scale and the amount of activity that they've been doing in investment banking, they have climbed to the top of all the league tables, which means they bring in the most fees of any investment bank in terms of, equity capital markets deals or DCM deals. And so they are at the top of almost every category, just except for M&A, which Goldman is currently leading. Then you have Morgan Stanley, which is extremely strong in M&A and also very strong in wealth management. And they have a very, very wide range, like they have a very strong reputation for analytical rigor and just producing very quality work. Bank of America, it's a top tier investment bank. They have great underwriting and advisory services, right? And they have a very large balance sheet. So a lot of their deals are sort of centered around the fact that they have a lot of capital that they can deploy. Citi is a very global firm. They're a financial powerhouse, also based in New York. And they sort of serve every major economy worldwide. And, they are very prominent in the investment banking space, working on a lot of deals. UBS is really well known for their strength in the wealth management space. They also have a pretty strong investment banking arm, especially after they acquired Credit Suisse in 2023 when the bank was in bad shape. Then you have Barclays and Deutsche Bank. These are the European firms. So with Barclays, it has very deep European roots. They're very strong in like fixed income and foreign exchange, a London-based bank. Deutsche Bank is Germany's largest bank, and they're a pretty big player in most of the transactions, or in many transactions that you'll see that take place in Europe. And next up, we have the elite boutique banks. And so this is something that may be a little bit less familiar to people outside of investment banking, but elite boutiques are extremely well respected and highly sought after firms that solely focus on providing investment banking services. So unlike bulge brackets like Bank of America or JP Morgan, they don't really do things like consumer banking, or you wouldn't necessarily deposit your money with them, but they play a very, very strong role in the financial services industry, right? So, as I mentioned before, right, fewer people outside of finance know about elite boutiques, but they are very highly sought after by students and also employers because they focus purely on investment banking, and they give analysts a lot more responsibility because there's just like fewer people there. And I think another big thing that is attracting people is that they usually have a higher base pay. So whereas like a bulge bracket, you might start at 110,000 for your base salary. There are a lot of elite boutiques that do better than that, maybe 120,000. But I think one of the bigger drawbacks of being at an elite boutique is that you may have less name recognition for people outside of the industry. So if you want to like leave finance, for example, and you give your resume to a recruiter, they might not necessarily know what like Evercore or PJT is, despite the fact that they're some of the most competitive and best investment banks on Wall Street. And so as we dive into those specific names there, Centerview Partners is probably the top elite boutique firm on Wall Street. They are really known for their collaborative culture and they have very high pay, probably like the leader in the major banks. And they are very strong in healthcare and M&A. Evercore, also up there. They are very, very strong in their M&A advisory and they have a very strong restructuring practice. And they also have a strong reputation for analytical excellence, kind of like Morgan Stanley. BJT Partners is really well known for its restructuring group. So people that work in restructuring help out companies that are in distress. So maybe companies that have like taken on too much debt and they can't really pay it off. And so PJT Partners, they take a lot of these restructuring deals, and the PJT restructuring team is probably one of the best groups, if not the best group on Wall Street, along with Goldman Sachs, TMT, so Tech Media and Telecom team, or Morgan Stanley's M&A team. These are some of the top groups that you would, hear about on Wall Street. And then you have Lazard, which is one of the oldest names in banking, actually, known for its like very intellectual culture, very strong in the investment banking space. Moelis and Company, relatively recently founded in 2007 by the investment banker Ken Moelis, and they are very, very prominent in M&A. They have a very strong restructuring practice as well. Catalyst Partners is the undisputed leader, I would argue, in technology investment banking. So they work on massive deals with companies like Google or Meta. And they, despite the fact that they have very few employees, I would believe under 100 people, they get to work on billion-dollar transactions just because of the relationships they've built and how strong they are in the tech space. Perella Weinberg Partners is very, very well known for its like client-centric approach. They have a good restructuring and healthcare practice. And Guggenheim Securities is also well known for providing strong advisory, and they're strong in healthcare and TMT, so tech, media, and telecom, as mentioned earlier. And then you get into the middle market banks. So middle market banks focus on deals that are smaller in volume, or sorry, smaller in size. So what does that actually mean to have like a smaller size deal, right? So if you have a deal that is like, it's a $5 billion acquisition. So this company's paying $5 billion to buy another company. That's quite a large deal. A middle market may work on that, but more likely they might work on something like a $500 million deal, where like a regional company in the Midwest is acquiring another company in the Midwest, something like that, right? And so they may work on deals that are smaller, but they also work on a very high volume of deals. So they end up making a lot of deal fees through that as well. So middle market banks may have name recognition. So I think most people on the street would know like what RBC is. They might know what, BMO is, or, especially TD. I think that's definitely a very prominent retail bank here in the US. But they're generally not as well known as like some of those bulge brackets, but probably more well known than the elite boutiques. And so working in the middle market space can be a really great option for those that are interested in middle market companies and they want to interact directly with like C-suite and learn more about smaller businesses. And so if that is where your focus is, being at a middle market can make a lot of sense. In terms of the firms that you'll see in the middle market investment banking space, Jefferies is probably the strongest one. And so they're a full service bank. They've been growing at a very quick pace and they really like to pride themselves on having like an entrepreneurial culture. Houlihan Lokey, I believe that they're the leader in deal volume. They just go through like a ton of transactions and they're known for having a very, very strong restructuring practice as well. And a lot of, some of the top students at UCLA will work at Houlihan Lokey's restructuring arm in LA. Piper Sandler, I believe, is headquartered in Minnesota, so they have more of a Midwestern tilt, and they do very well in healthcare and biotech banking. William Blair, I think that's a Chicago-based bank. They have very strong, M&A and ECM arms. RBC and BMO are Canadian banks, and they do very well in, sectors like industrials, with RBC being particularly good, like energy and mining and infrastructure. Raymond James is middle market firm. They're known for being very active in like healthcare and tech banking, known for having a good culture. And Nomura is Japan's largest investment bank with a presence in the US, and they do a lot of work in Asia Pacific cross-border M&A deals. In terms of the geographic breakdown of where these firms are, what they focus on, so we'll start from west to east. If you want to work in technology investment banking or healthcare investment banking, I think the best place to do that is probably going to be San Francisco. So a lot of San Francisco banks, like Catalyst Partners, is based in San Francisco. They'll work on the tech deals because that's where the tech companies are in Silicon Valley. Um, in my city of LA here, if you work in banking in LA, you will probably be working on a lot of like media companies. So like maybe like entertainment studios, and like communications deals. And there's a lot of like real estate and gaming companies. And so gaming in the sense of like maybe casinos, that's kind of a lot of what you might see out here in LA. Moving further east, you will get to Houston, right? So Houston in Texas, a lot of oil and gas and energy deals. Chicago has a lot of industrials that these investment banks tend to work through there because I think there are a lot of like factories and industrial capacity out in the Midwest. And then New York is the definitive financial capital of the world. So you will get a taste of essentially everything if you decide to work in New York. And so that's kind of what the geography looks like and what you might want to keep in mind if you decide to recruit for investment banking and you want to choose where you want to be working geographically. And so I think one thing that is important to mention is like obviously there's a lot of great benefits. There are a lot of benefits associated with working in investment banking, and there are plenty of great investment banks out there that you could work at. But because of this, there is quite a lot of competition, and there are a lot of challenges to getting into the industry in the first place. So the first factor to think about is just like the sheer numbers. There are thousands and thousands of students that want to break into investment banking every year. But the size of these classes, or like investment banking analyst classes, they're going to be limited, right? So for a little bit of context, my summer internship investment banking class had a class of around I think 140, maybe 147 summer analysts. And that's at one of the biggest banks on Wall Street, right? Just 140-ish kids. And assuming like around 150 or so, 150,000 or so people applied, likely more than that. That represents an acceptance rate of far far less than 1%, 0.09%. So it's very competitive just based off the sheer numbers that you see there. Another reason that it can be difficult is because they pay a lot of attention to which school you go to. So if you go to the University of Pennsylvania, like Wharton, for example, you will probably have a pretty good time, get a lot of interviews, and probably land a good offer because they consistently dominate recruiting, mainly because they have so many alumni in these firms and they have a reputation for, producing very good analysts. But if you go to a school like UCLA, we have some people at these banks, but not as many as like NYU, Michigan, or Wharton. So that makes it a little bit more difficult to break into these investment banks. In order to get an interview in the first place, a lot of these banks expect that you network with people beforehand because they just have so many applications. It's very difficult to really filter through and find the best talent. So a lot of the times they feel that you will just network with them and reach out for coffee chats. And so landing these connections and getting people to network with can be very challenging, again, because there's so many applicants and so many students that are interested. And I think that final barrier there is probably like just passing the interview in the first place. These interviews can be tricky if you haven't studied for them. And even if you have studied for them, there's often times where you might get tripped up or you might get asked a question that you haven't seen before, right? And so these are not easy to nail. And even with a lot of studying and preparation, and there are a lot of times where maybe you say the right thing and you answer every question perfectly, but it's just still not pass the interview. And oftentimes a lot of luck is involved. And to give a little bit of context on where UCLA sits at, this data is not 100% up to date, but it's the most recent like summary I was able to find. I believe it's from 2023. And it shows here that we are at number 19 in terms of where our placements are. So not bad, but definitely not as good as like an NYU or a Ross or a UT Austin, for example, right? So we have a lot of kids that want to do investment banking, but not necessarily the most people that get in. So if you want to recruit for investment banking from UCLA, it can be a little bit of an uphill battle if you want to go to a place like New York, for example. But if you want to recruit for a bank in LA or a bank in San Francisco, it's usually a little bit easier because we're more established on the West Coast. But that's not to say that it's impossible, and our offers have been, coming in a lot, right? I think our placement has improved quite a bit just since the time that I started out here. Um, and you're seeing that we're placing at firms like Goldman Sachs or Morgan Stanley or JP Morgan. And we're also doing really well in buy-side firms, right? So extremely competitive companies like Blackstone, Bain, Sixth Street, Thoma Bravo. They're providing offers for students at UCLA, and I think that overall the trajectory is going upwards. And by the time you guys start recruiting, I think that it's going to be very, very strong. And you'll be in a great position to do that from this school. So, with all that in mind, I think that we can sort of get to that central question of why we gathered here today, right? So, why would you want to pursue investment banking? So, we just talked about how a lot of investment bankers will be working well into midnight, sometimes past midnight. And so, like, well, what's the point of going through this? So, I like to think about it like this. Especially when it comes to a place like UCLA, where you have a lot of high achieving and very ambitious, students. A lot of them will pick, one of four paths, right? So there'll be a doctor, there'll be a lawyer, an engineer, or like a banker or a finance person, right? So, um, if you can make or sorry, if you can work very long hours, you want to learn a lot, but you don't necessarily want to be a doctor, lawyer, or engineer, banking could be an option. For me personally, I wasn't interested in doing pre-med, didn't really want to go to law school, wasn't inherently interested in engineering or the sciences in that way. And so I think naturally banking sort of appeared to me as an option. And as I learned more, I felt that I was actually, genuinely interested in it and felt that I could get into it if I really tried. So I tried, and here I am, right? I was able to do investment banking over the summer, and I'm very excited to be returning full time after graduation. And I think just to expand on why it was worth it for me, I think one big thing is optionality, right? So if you do investment banking and you have that on your resume initially, that really opens the door for many things to come after. If you want to go to private equity or hedge funds or maybe corporate finance or corporate development, banking is a path that really allows you to pursue that. In terms of the learning, you get to get familiar with financial models. You get to really understand businesses and manage like processes. And I think that the professionalism and the attention to detail that you develop while being in investment banking is something that's very hard to replicate in other industries. And I think obviously compensation, that's a big part of it as well. Like there are not a ton of jobs out there that would give you six figures just right out of the gate. And you're almost always going to be guaranteed a lot of upward mobility, which is definitely something that's not guaranteed in other industries either. And I think for me, genuinely interested, I thought that financial modeling was interesting. I thought that the markets were interesting. I kind of want to understand how money works, how capital flows. And so I felt that banking would be like a great place to start and really immerse myself in that environment. And so, what is the kind of person that would thrive in banking, right? So, I think that someone who is like hardworking, someone who's enthusiastic, and able to thrive in a hierarchy is someone that will do well in banking. Someone who is open to like sacrificing their time is probably someone that would do well because you do sacrifice a lot of time if you get into this industry. You will spend more time in the office than probably seeing your loved ones or your friends. And so that is a trade-off that a lot of people need to be willing to make if they decide to pursue the industry. And this is sort of a continuation of what you guys may have seen in our first session, but this is what like a salary progression could look like, right? So up on the top, you can see there in the top right, which is like the implied age of where you're at. As a first year investment banking analyst, as a 22-year-old, you may be pulling in 180,000. And then throughout your career, just in the first 5 years alone, there is a path to making it to, making 500,000 per year, which is pretty significant, often life-changing money. So especially for people that grew up in harder circumstances or at least want some level of comfort in their lives, going down this path can be something that's very lucrative and something that's very like compensating. And so, that is one big reason why a lot of people choose to pursue the industry. But I think with that, it's also equally important to consider like why not? Like maybe why would you not want to do banking, right? So I think probably one of the biggest things is that bankers work a lot of hours, right? Because you are in a client-facing industry, you need to be there for the demands of your clients, basically no matter in no matter the time, no matter the circumstance. And so even if you aren't necessarily at work, you're kind of expected to have your phone on you in case something comes up, which is something that can take a toll on a lot of people. And I have heard stories of analysts that have worked like on Thanksgiving and on Christmas and like during New Year's. And so that is something that you should really keep in mind if you're considering whether you want to do banking or not. And I think just continuing on with that theme of like, we talked about the kind of person that would enjoy banking or would thrive in banking. Equally important is to understand the person who might not enjoy banking, right? So if you don't really like working in teams or very strict hierarchies, that environment in investment banking is going to be pretty challenging for you. But I think more commonly, like if you really, really value work-life balance, in those first, 2 years coming out of college or just in any job that you want, essentially, investment banking might not be the right fit for you because the balance would tilt very, very strongly towards work and not much with life. And I think finally, if you just find it to be just inherently disinteresting, you're just not interested in financial modeling, you're not interested in the markets, that's not really your cup of tea, not into businesses, I think it would be very difficult to argue that you should pursue banking. And just to give a sense of what my hours were actually like, in investment banking. This is kind of a list of some of my longest work days. So there was one day where I came in at 8:50 a.m. and then I left the next day at 6 a.m. Right. So basically pull an all-nighter in the office. There's something that I was assigned kind of late at night, and I didn't actually know the proper way to do it. So I just spent a lot of time on that because there was time pressure to get it done by the morning. So I got it done by the morning. And so that ended up translating into a 21-hour workday. There was also, a day on the 7th where I worked, an 18-hour sprint. And on average, I did maybe like 11.4-ish hours per day. But that average is kind of dragged down by the fact that I also have weekends included here. So I worked every weekend while I was doing my internship. Not necessarily what you'll experience when you actually go full time. I think when I was in the office on the weekends, no full timer was there, but almost every intern was there, which is kind of funny. I think it's because we all wanted to make sure we got our return offers. But yeah, it ended up being a lot of time in the office. And so 11 hours, maybe you round it up to 12. Concretely, you can think about that as going in at 9 a.m. and then leaving at 9 p.m. on average. And I thought that like a helpful visualization would also to sort of break down the days of the week and the hours that are involved, right? So let's say you sleep at midnight usually and you wake up at like 8 a.m., right? So this is what like a quote unquote good week would look like at around 60 hours. So like I mentioned before, you're going in at 9 a.m., you're leaving at 9 p.m. On Friday, you get to leave, at 5 p.m. because most people kind of generally leave a little bit earlier on Fridays. Spend some time, just having free time, having leisure time. Maybe you work a little bit on your Saturday, but beyond that, your Sunday's free and you have time to just kind of be by yourself and enjoy like 8 hours of sleep per night. And you get a decent amount of leisure time, as you can see in this color coding here. But again, this is still a pretty intense work schedule, and most people are going to be working 9 to 5, so 40 hours a week. So this is already quite intense, but this is what you would kind of consider to be a good week in investment banking. And then after that, you have a bad week, which is 100 hours a week. And so I think I hit 100 hours, maybe like 1 or 2 weeks out of the 9 weeks I was there at my firm over the summer. But yeah, so if you think about it, that's like going in at 9 a.m. and then leaving at 2 a.m. every night, and then working through your weekends every weekend. And your only real amount of free time is Friday night, maybe a second or two on Saturday and Sunday. And obviously, you can see the white there is just transition time between these different activities. And so you can see how this can get very, very intense. Personally, when I went through my first 100-hour week, it wasn't actually as crazy as I thought. But I think that over time, when you do too many of these, it really wears on you. And it can be not the best for your mental health. So that's one thing to take into account there. So I would say that maybe 20% of your weeks are going to be good weeks. Maybe 20% of your weeks are going to be bad weeks, and then most things will fall somewhere in between that range. And I think it's also helpful to understand like particular people's stories, right? So we're here at UCLA, so I decided to reach out to some of my friends at UCLA who chose to do banking, and actually one that went from going into banking to doing something else, right? So Mia is someone I interned with over the summer, and she talked about how she really enjoyed IB because she could handle the pressure, she could handle the hours, and she actually found the work to be pretty interesting and really liked the people that she was working with. Sophia, on the other hand, like she could not see a future of like a bunch of Excel files and 2 a.m. calls from her boss. And she felt that, it probably really wasn't worth it for the kind of lifestyle that she wanted to live. And so she talked about how it was really difficult to step away from banking because so many of her friends were pursuing banking. But when she interned at a tech company over the summer, she really loved the experience. And she felt that exploring new industries beyond investment banking was very much worth it for her. And I think that it's also important to emphasize that there is like so much that you can do. And this chart here that I made is honestly just even just within the framework of what UBS supports. So that doesn't even mention other career paths outside of business and tech that you can pursue, right? So if you want to stay in the finance side, you can do like corporate finance, you can do asset management or other kinds of banking that aren't as intensive as investment banking, but still give you like a nice skill set that you can use. You can go into accounting. UCLA in particular does really well with the big four, so Deloitte, PwC, EY, KPMG. Um, you can go into consulting, probably the most alternative career path to investment banking. So that's like working as a consultant at McKinsey or BCG or Bain, for example, right? Or you can go into other kinds of consulting. You can do, user experience or user interface design at a tech firm or do like product development or sorry, product management, which I think is what Sophia did over her summer, right? So there's a lot of things that you can do where you can learn a lot and make, a good amount of money that aren't investment banking. So if you choose to do investment banking, I think it is really important to be thoughtful about why you want to do banking, right? So I think at its core, you really need to understand who you are, right? Reflect on your values, reflect on your preferences, think about what you like and whether this path is truly for you. And you might not know what that is initially, but I think one of the best ways to understand whether you like this or not is to just dive into the work, do a case competition, try an internship, and engage in coffee chats. And a coffee chat is basically just like speaking with someone for like maybe 30 minutes, for example, to learn more about their career, learn more about their path. And I really recommend doing this with upperclassmen at UCLA just to get that sense, right? I think equally important is really understanding why you want to. So let's say that you've decided you want to do investment banking. Like, why do you want to go into it? What are your personal reasons, right? There aren't like a ton of like quote unquote invalid or bad reasons. Like even if you just want a high salary, that's perfectly reasonable, right? But I would encourage you not to do it because you have a fear of missing out. Don't do it to seek validation, and getting an offer won't really solve your problems or make you happy. But obviously, it can put you on the path to a career path that you potentially enjoy, right? Make sure that you're preparing yourself for the work that it'll take. So, as first years just coming in, it's always really good to understand that recruiting seriously does take quite a lot of time. There are going to be late nights, there's going to be stress, there's going to be long grinds, a lot of rejection, a lot of failure. But if you are motivated enough, it can pay off, right? And as you go through that, just keep in mind that deciding to recruit for an investment banking internship can be like a pretty serious commitment, like 1.5 years. So if you think about your entire freshman year and, part of your sophomore year, you're going to be thinking about that for a while. So it could take up almost half of your time as an undergrad. So throughout that time, make sure you're not losing sight of your core motivations. Because if you have your motivations and if you have your reasons set, then everything else follows, right? If you're sufficiently motivated and you want it bad enough, I truly believe that you can't get it. So I think with that, I wanted to take some time to reflect on the pursuit of getting into investment banking for myself, right? I think one of the pros for doing this was like by sophomore year, I had an offer in investment banking. And after my junior summer, I now have a full-time offer. So I can sort of relax knowing that I don't have to do job searching as a senior. But it's also a con that I have a full-time offer in banking because I'm going into this for at least 2 years. Which is when most analyst stints, which is how long most analyst stints are. And it can be pretty challenging, right? I'm going to be working a lot of hours probably. It's probably going to be quite intensive. So it's nice that I have this offer, but also a little bit daunting that I do. Um, I really enjoyed the work that I did over the summer, and I'm actually like very excited to go back and see the people that I saw and worked alongside. But it does take up a ton of time and energy. So like recruiting for banking, supporting others in recruiting, and like doing the internship itself took up a huge chunk of my time in college. And so that is definitely one of the drawbacks. I think that, I've met a lot of great people along the way. So some of my closest friends have come from being in BVI and like the wider business community. But being involved in the business community means that my priorities have kind of shifted a bit. And so I'm not spending as much time on things that I'm interested in or passionate about, like music or film. And I've tended to spend a little bit more time on finance things. Um, I think also one of the best parts of this experience was that I've been able to help a lot of people. I've been able to support undergrads in recruiting, and it's been an incredible experience being the director of the investment banking committee and also just being able to interact with so many incredible people. But at the same time, I think about the work that I'm doing and like how much value am I adding to the world? So yes, like I'm working in mergers and acquisitions and I'm facilitating those deals, but like how much am I really doing beyond sort of moving companies around and helping corporations here and there, right? So I think there genuinely are ways that being in investment banking can be transformative. Like, let's say that you raise capital to help a biotech company, create a cure for a drug, or maybe you help some technology company develop amazing technology that changes the world, right? That is a possibility that can happen if you are in investment banking, but that's not always the case. Sometimes, the value proposition can be dubious. And so that's one thing that I've also thought about when I was reflecting on my pursuit of investment banking. So, with that, thank you for attending the session. In summary, right, just remember the main categories of banks that are out there, namely the bulge brackets like Bank of America or JP Morgan, the elite boutiques like Centerview or Evercore, the middle markets like Jefferies or RBC, and that bankers at these firms work on advisory like M&A or RX and capital markets like ECM or DCM. And there are plenty of reasons to pursue banking, like optionality and learning or compensation. But there are also a lot of reasons not to pursue banking, namely, the time commitment and not being interested in the work. So, in next week's session, which will be the final session, we're going to be talking about the key resources and considerations when wanting to break into banking. And, again, encourage you to attend that session and be a part of that experience. And we're going to be in the same room in Young Hall. And as always, I am around after the session to answer your questions, and I'm always reachable via email or phone number. So thank you so much for your time, and please let me know if you have any questions. Thank you.